Hi, welcome back to Stock Talk. This is Joe Rabil with Rabil Stock Research. So most of you know that I've been working with the institutional community for over 30 years doing both research and consulting. However, when I started in the business, we had a product that was basically cutting edge scanning. We were the first ones to do filtering on technical analysis. And along with our research, we did a lot of investigating on best ways to do different types of screens to essentially do pattern recognition. So with that, and the reason I'm bringing that up is that I use the computer and software to my advantage. And one of the things that I wanted to do this week was to show how to use the screening tool, the scanning tool in ACP, and show you the power of that, both from a regular price alert standpoint as well as a custom alert. I'm a big believer in saving time by not watching the screen. So let's go ahead and get into this agenda. So what I want to do is help you to stop missing trades. And I can tell you for a fact, even when I was sitting in front of my screen, I would miss trade and looking for trades without using alerts. I would miss trades all the time. Once I started to implement this simple strategy, I stopped missing trades. It's just a fact because you're letting the computer do the work for you. And it also allows you not to be glued to your desk, especially with the software here at ACP. They have the ability to, I get texts now if something crosses a key level. And so you can set it up that way. It's pretty powerful. And I also learned how to do custom alerts just recently. So I want to show you how to do both price and custom alerts, something that's pretty powerful here. Once we're done with that, we'll go through the individual stock requests that came through. Let's go ahead and get into this lesson here. Okay, so I did want to mention that I don't work for StockCharts. I don't want to give you the wrong impression. I'm just showing you, I think, something that's a pretty powerful tool that I'm starting to use on a regular basis. So I said ACP a few times, but in reality, it is StockCharts, and you want to go to your dashboard and get into the charts and tools, and I'll just show you where to find it. If you click on charts and tools, you've got a lot of new things in here. One of the things, if you scroll down on the right, you can see both your scans, but also if you click on your alerts, they pop up here and you can see the predefined ones, but you can also see your price alerts, and then you can also see your advanced alerts. I'm starting to use this now pretty extensively. Even though I'm only showing a couple right now, I kind of deleted a few just to keep it really simple. So if we look at the simple price alert, and this is an example, CYBR is a stock that's been moving up for a long time, and I've put a target up at basically around 295 as sort of a target area. And so you can do that. You can put that in to determine what level you want to use, and if it hits that level, then it'll send you, and I'll just show you the way you could go about doing that. You can create the alert with this little bell here in the bottom left, and that's actually in the ACP. And most of the time you're creating alert on something that's breaking out. Like if it's breaking out of this area, this was one of the stocks that I've been talking about. Let's say it was just breaking out above 575. You can just put the alert right there and create it. And again, for me, I'm actually getting it to send a text to me for when that happens. You could do an email if you prefer. So that's the price alert area. Very simple. Most of you are probably already using that actually. But let's look at this custom alert area. And I'll show you one that's kind of already taken place. If I click on this, you can see I've just put under the alert criteria, I've put the symbol equal MSCI, and weekly RSI is less than 50. So I'm just looking for a simple situation where the RSI actually drops down below 50. I know I've got price and momentum in my favor, and I'm looking for a pullback. And I'm going to show you on HBM how this would actually be a lot more relevant for a stock that is on the daily chart. And so let's go ahead and look at that. If I go through and look at my HBM alert, I'm looking for the daily to pull back below 50. Now, why am I doing that? Because we just broke out of this nice base monthly, weekly behind it, and I'm looking for entry. We had earnings, so I didn't necessarily want to buy right before earnings. So now what we can do is we can watch for a pullback here. But the problem is that if you're watching for a pullback, you got to sit there and watch. You could do a price alert, but sometimes the stock will carry a little bit higher and then it'll pull back and it'll just miss working its way back to the breakout area. So what I like to do in these situations is look for the RSI 5 to drop down under 50. It's basically to neutral, all right? We don't want to buy overbought. We want to look for kind of a neutral. So instead of doing it on a weekly chart, I want to do it on a daily, and it'll highlight for me when a stock is reaching a level where it's worth investigating again. So that's how I am using that specific alert pattern there. Another thing you could do, so I've done one on the weekly RSI pulling back, and that would be kind of like an initial pullback right before a breakout. A lot of times the RSI 5 can give you a heads up before you break out, and that could be the case in something like an MSCI happening on the weekly chart. Finally, let's look at something like URA. So again, I can put in symbol equal URA and then the weekly close breaking the 40 on the weekly chart. So if we look at this real quick, I can just show you that what I'm watching here, this is a stock that we highlighted, been in a while, probably down around 22, have taken a couple of targets along the way, and I'm sort of trailing a stop now. Now, the reason why I don't want to necessarily just exit this is that we've actually come down and made a double bottom, and in fact actually making a slightly higher low while the MACD is making a lower low. This is one of the signals out of my course. It's a reverse divergence pattern. And the 18 is still rising right now. But I want to be highlighted without necessarily watching this every single minute is if it breaks, if I get a break below the 40 weekly line, I definitely want to be alerted to that. That's probably something a little bit more serious. And even though this is a longer term trade, if I see that taking place, I probably want to take a really hard look and determine whether I want to stay there. And I do have a hard stop in. Don't get me wrong. I use an average true range. I mean, this is, again, see, there's some concepts out of my course. I'm using average true range on the weekly to help determine where the key levels are, where to take targets, and where to place stops. And those are hard levels that are put out on the system. But I also want to know if I'm breaking a key moving average. And sometimes you can break the 18 without it rolling over. So I don't want to necessarily use the 18. I like to use the 40 in these situations. So these are just a couple of different concepts of how you can use these both simple price alerts, and you get a lot of those, and then you also get plenty of these custom alerts, and you can do basically anything. I've just given you a couple examples of pullback patterns but using the RSI 5, but you can also use moving average breaks. You can do moving average breaks to the upside. One of my trigger methods is a break above the 40 on the daily chart when the weekly is in an uptrend. So something to be on the lookout for. Just a great way, I think, to use this software to really kind of help you save time. If you're enjoying the content, hit that like button and also subscribe. So my services can be found at rabilstockresearch.com/services. My suggestion is to take a look. I did release the new course this week, and I did change the pricing. So I'm actually allowing lifetime access now as opposed to just a yearly subscription. So go ahead and take a look if you have an interest there. Okay, let's start out with the QQQ. And, you know, if you think about it, one of the things I've been talking about here, especially for my video on Fridays on my YouTube channel about the S&P, it's really the same thing for both the NASDAQ and the QQQ. And that's the fact that we've jetted away on the weekly chart and we're not testing the weekly line anymore. It's not happening on a regular basis. So this time frame, not that it's less important, because we do want to keep an eye out on the momentum conditions, but what I'm keying on right now is the daily chart, because if you notice, it's different. This keeps testing these key lines over and over and over again and successfully holding them without causing the 18 to roll over. I think that's the key right now. We've had a trend that's been in place since November on a daily chart where the 18 is above the 40 and both lines are rising. That's a long time. So when we look at these moving averages, one of the things we want to look at is, are they kind of parallel? That shows the strength of a trend. We want to also know is how long this signal has been in place. It's been in place for a very long time. So we should be thinking that at some point the 18 is going to cross down below the 40. It just doesn't last that long without getting some interruption. Now, there's two ways this could play out. It could break, hit the 40, bounce off, and do like a 40 to 18 bounce, one of the patterns from my course. But the other thing that could take place is we could get some kind of a climax pattern. If you notice what's taking place here, we don't have strength in the ADX. You see how we're diverging on an ADX basis as this moves up? But we're not breaking down. We're not actually breaking the 18. We're going to need the 18 to break and have that roll. Now, if that happens, then it's an exhaustion signal where we have momentum slowing, so it's exhausted, and then we roll over and price confirms, right? The other way it could play out is we don't break down and we actually jet away to the upside. And then we get ADX looking like it's actually making another move to the upside, but that's actually a climax. So this is something, again, this is a specific thing that I talk about in my course in detail that I think you want to be on the lookout for. So we're looking for one of two things to take place. So we've got divergence here. Does it cause a rollover pattern or a more corrective wave to take place right now? Or does this ignore it and surge to the upside? If it does, be very careful about thinking that the ADX is kicking back in to the upside. All right. So this is something we really need to key on, I would say, over the next 2, 3, 4 weeks. All right, look at this IWM because this is encouraging. I have to say, it's very encouraging what's taking place. I'm going to go over here because I want to show both the improvement in the price structure. So we had, downtrend in place, making lower lows and lower highs. And then we pushed up here, made a higher high. Now we're not making new lows. You see how we haven't been making new lows? And then the one new low we made, it undercut the low and then immediately reversed and took out the high. So this action here was pretty encouraging. It's more of a bull alert. But now look at what's taken place. We've actually come back down and tested support from the 18-month line, and now we're making a higher high. So you have to kind of think about this being more like a reversal pattern. Now, the one component that is missing in this is the fact that the relative strength is still below its moving average. I mean, I think if we're going to see strength, true strength in the market where we're going to get a lot of expansion, especially from the small cap arena, we're going to need this relative strength line to turn up to the upside. And I'd like to see it take out the high from late last year. I think if we have that, then the conditions in the market are actually, even though they feel like they're way overdone, you could see a broadening effect. And what that means to me is that stocks like Apple and Tesla and Google and Amazon and these magnificent seven stocks could actually correct, but the average stock could do a lot better. So it could be a pretty good environment, even though the big names may be causing the indexes not to do a whole lot. All right, while we're speaking on this Magnificent Seven, I want to cover a couple of these because I talk to institutions. So I do regular reviews of portfolios with institutional client, my portfolio managers that are, fund managers and stuff like that. And what continues to come up is because they're battling these indexes. That's right. It's them versus the index. How can they do relative to the index? And so always getting questions on stocks like Apple and Google. And so I want to cover a couple of these today. And one of the things I want to key on, and I really believe, certainly if you're a professional, you need to really key on this relative strength line. This is the relative performance line versus the S&P. Right? And if you notice what's taken place here, you had a break of the trend line way back in last year in the fourth quarter, right? And then we came and tested. We went and tested the high. So that's the two. So 1 is the break of the trend line, 2 is the test, and then 3 is coming back down through this low. Well, you can see what's happened. We have a relative 1, 2, 3 reversal. Look, that's not happening on this time on the price chart. The price chart is just now breaking its trend line, right? This is just breaking the trend line, but on a relative basis, This has been telling you this new high was a significant divergence on a relative basis. We knew there was a problem developing. We'd made a big move and come all the way back up to the high. You got some divergence in place. And when we have that, then it increases the likelihood that this wants to come down and test support. Probably closer to 120, maybe 125 or something like that. But the big problem we've got is on a relative basis. I don't know that this is going to break down and start a big bear market for the stock. But, you know, we've got 3 or 4 of the Magnificent Seven that are in this phase. We've got Apple really struggling, and that's actually more closer to a breakdown where if you go look at its relative strength, it's been from the beginning of the year, it's basically just been straight down. All right, very poor performance on a relative basis. But we still have a couple that are in pretty good shape. But then if you look at something like Tesla, that's very weak, and it's already broken. Let's look at Amazon. So if we look at this, you can see, let me actually go and look at all these charts. So let's look at the monthly here, because you've made a move to the downside, you turned around, and you've made a move all the way back up to the high. Now, that's not bearish. That's 100% retracement of the decline, right? We had a bear market and we've retraced 100% of it. So I kind of think about it like the midpoint of that decline. So move down and then move back up. And then think about this zone, probably starting around 150, is really, really strong support for this. Now, typically, the moving average will help define that. And as this moves up and if this ends up pulling back, you know, we could easily meet up somewhere around the 150 level if it decides to pull back from here. The one thing that I do notice is, especially in this last part of the move, as we've approached the old highs, is the volume isn't there. We're starting to see, I mean, the ADX is only at 25. We've made an extended move to the upside and ADX is only at 25. Let's look at the weekly though. The weekly, to me, it's a little interesting because when I go and I look at what's taking place in most of the big stocks that have made big moves, I've got momentum confirmation on both MACD and ADX. So it's hard for me to get overly bearish on these stocks. It doesn't mean that I want to buy them, right? These aren't buys, I don't think. I think they've made a big run. You know, we had buying opportunities on these pullbacks. This was more of a turnaround. And then this was kind of like the first pullback in the new uptrend and got close to a zero line reversal. We were in a power trend based on the ADX here. ADX stayed above 25 throughout the pullback, and we were sitting on the 40, and the 18 was, this is one, again, a pattern that I talk about with my subscribers that I think is pretty important. But now look at how far we've run. So I'm not all that interested in buying this. I probably would have been scaling out a little bit as we move up towards these highs, and I'd be looking for signs of distribution. Starting point would be breaking the 18-day, which we haven't done here in a few months. All right, let's look at a couple. So this was interesting. I got a couple questions this week related to shorting. All right, and the person's just kind of trying to think ahead, right? And so let's just evaluate these and see if there's anything there. So one of the things that you can see is this thing jetted away from the 18-month line. We got an opening here, and then we got this big red bar. And it did it right at this big round number at 50, right? So we got the big red bar. So I think there's pretty significant resistance at 50. I don't think we're going to get through 50 anytime soon. The question is, do I think I can make money, on the downside, right? Because it's a lot different thinking a stock has kind of made a peak versus something, can I make money to the downside? And here's my problem. Look at the ADX strength. We're above 50 again. You see how this is a power trend? This is crossed above in 2021. It crossed above 25. It has stayed above 25 throughout this whole period on the monthly. And then if we go and look at what's going on the weekly chart, it crossed above 25 here, and look at how high it got. I got up to 50. It was lingering above 50 for a very, very long time. So I tend to shy away from trying to short stocks that are this strong. They're too strong. So I would be more inclined to want to pass on this. It's actually crossing back above the 18. Now, the one way it could play out is if it fails at the 18, which is rolling over, and this forms some kind of an opposing trend trigger, then maybe you can consider it. But I would probably pass just based on the strength. Now, I got one other one by the same person, same guy requested this. This one's a little different. This doesn't show any real strength, and it's rallying up to the 18-month line, okay? And on a weekly chart, we're trying to get this 18 to cross above the 40. So if we had that, then we could possibly look for a setup. But I don't want to do this above an 18-week, all right? It's got to break the 18-week. If I'm going to do it, it's got to be off of that. It's got to be more of a monthly, weekly. I don't want to do this on the daily above the 18 weeks. So hopefully that helps. All right, let's look at a couple other requests that came in. So I recognize a lot of guys like to trade off the daily chart. All right, and I don't have a problem with that, but you have to take it in the context. All right, you have to understand where, like, if I get a 2-bar pullback on the monthly and I'm looking at the daily at this point, to me that's not bad. But if I'm up 4 months in a row and I'm looking to trade extended away from the 18 week, right? So now I'm extended above the 18 month, I'm extended above the 18 week. Now I want to go and look for a potential pullback here. I'm not as interested, right? I mean, it's the same concept I said about the Qs. You see where we crossed, the 18 crossed above the 40, but way back here in November. It's been a very, very long time. The longevity of the trend is very important to me in each time frame. So the longevity of the daily trend to me has gone on too long. It's not really showing any real signs of weakness on a momentum basis. To me, it's just a little late. Now, if you want to trade this off the hourly, maybe you could do that, but you have to be really nimble. It is forming a reverse divergence, all right? So these are some of the things we want to be able to look at. And initially, the moment you see it, you see this and you recognize what that is. That's something that I give you homework on in the courses that'll kind of help you with that. But yes, there's a possibility this punches to a new high, but you're going to have to trade the management, do the management off the hourly to make it work. Okay, let's look at this COTY because this one is actually in a pretty good position. This was a good request. Whoever brought this up, I think has been watching a lot of my videos because you got 18 month and 40 months. See how they're rising at about the same rate. Now this has a low ADX condition, but it's turning around. It's early in the pattern right now, and this is a consumer staple stock, so it's not like we're not expecting a lot of strength out of these yet. But I'm noticing improvement in the consumer staples. Now look at what's going on the weekly. We had kind of a down move. We rallied up, and then we found support at the rising. Now it's a rising 18 week. And it looks like this area right around 12.5 is pretty important. Now, if we go to the daily at this point, look at what this is, right? We've made a big move to the upside, and now we've pulled back to the 18, which is above the 40, both lines rising. The MACD is still above its signal line. The ADX is still above 25. We've got a pretty good volume pattern, good volume to the upside, and the pullback was on lighter volume. I think this is pretty attractive. Now, the problem we've got here is on a relative basis. So if they want to keep owning AI, then a stock like this is going to keep having more of a struggle on a relative basis. Like, it's not a dynamic relative stock. But if we end up going through some kind of a correction, I could see this stock playing actually pretty well. It's probably something that could move to the upside. So I don't have a problem doing it, but you're probably going to need to use a stop below the 40 there and keep it a little tighter. Okay, let's look at this NBIX. This is another really good request here. So we've got this massive breakout developing. Now, one of the things that bugs me is you had a green bar here and then you kind of erased it with the red bar. So we really need, this is something I've been talking about with my subscribers on a weekly basis, is this needs to hold this area. It's a low ADX breakout on the monthly. So, I mean, the potential here is it's actually pretty attractive. I do like the fact that we had this one big red bar, and then since that time, it's all been narrow range to the downside. So that is encouraging. What I'm expecting, though, is probably a little bit more consolidation to take place. But if you're asking me, would you take the opposing trend trigger back to the upside, coming up back up through this high? I think the answer would be yes. I think that would be good enough. Now, I know we've moved down and we've got overrun here, but notice what MACD has done. It's already moved up and come back down. It's kind of already formed a double bottom here. We've already tested this area. We already went into the zone and came out and didn't follow through. So I'd be willing to take this coming back up through this prior peak. Thanks for watching the show this week. If you have any stock requests, send them to stocktalk@stockcharts.com, or you can just leave it in the comment area. Also, if you have an interest in learning some more about some of these techniques, you could go to my YouTube channel called Invest Like a Pro. Have a great week, and we'll see you next time.